Welcome to the Business of Property podcast. I'm Simon.
I'm Stuart.
We're both property people running our own businesses. This podcast is just us chatting, as we often do, about anything and everything property. And this week, I think we're going to chat a bit about some of the topics that Tom included in our three-way discussion last week. But before we get going on that, I think you have some sort of good news, Stuart?
Yes, well, it's definitely news. I think the jury's out if it's good or bad. No, so we had some offers on the Croydon flip, which we've talked about previously.
Some offers. Oh, I hadn't realised there were multiple.
We did have a couple of. I mean, but some we just wouldn't consider. Some were beyond ridiculous, so we didn't even consider those. And then we did have an offer come back. So just as a quick refresher, this was a property we've bought in Croydon and developed it from a 1-bed to a 2/3. It's actually two beds with a dressing area. So we've added a lot of value to it, and we've created an additional bathroom and so on. The challenge for this one was that we uncovered a need for an EWS1 form, which is an external wall survey. EWS1, which I'm now a lot more conversant with than I was this time 6 months ago.
Yeah, I don't think you're the only ones being caught out by this. Since our initial discussion about it and you mentioning it's causing problems for your sale, I've seen it in a number of headlines, even sort of outside of investment circles. So complaining about people being trapped in their properties because they can't sell them because they can't get these forms signed off, either because the block of flats actually doesn't need one, but some mortgage companies are just blanket saying we need this form or we won't give you a mortgage, or where the flats do need one but they can't actually get the surveyors because they're in such high demand in order to get them to come around and fill in the paperwork for them, all the way up to, of course, blocks of flats that need work doing before they can get their form. So I think there's a very wide problem with EWS1 forms at the moment and them causing issues for sellers all over the place. So sorry, Stuart, I interrupted your story. So you carry on.
No, it's part of the conversation. And I think I agree, because we had that conversation on the podcast and then I started hearing more about it. So I think, we can safely say that those listeners of the Business of Property are getting, up-to-date information, as negative as it might be.
Before it happens.
But it is a big problem. And like you, since we've talked about it on our podcast, I've heard other podcasts talking about it, and it is a big problem because the problem arises not just from the EWS1 requirement itself, but from the managing agent's propensity or lack thereof of wanting to get that form. So what I've seen is that there are managing agents that are just saying that they won't get the form, because we're talking about something that could cost in the region of thousands. I don't know specifically, but we're talking multiple thousands to get it done. Not every managing agent is going to want to do that. It doesn't make sense to me, though, because ultimately the leaseholders are going to be the ones that pay for the lion's share of it through a service charge or however that's made. But what I'm seeing is that managing agents are dragging their feet because it is such a large expenditure. And like you say, if they say, well, we don't feel there is a requirement, there may not be from their perspective, but from a bank perspective, there is. And
yeah, exactly.
And I think we mentioned it on the previous podcast, but from a broker I know, he said that back end of last year, there were something like 3 mortgages you could get at the time that would still provide a mortgage regardless of the situation. So far this year, and we're 10 months in, there are 0 mortgages you can get with that. So it is. I think it's a huge problem, and I've posted about it on my sort of social media because I think it needs a little bit more attention. But we've digressed.
We have a little, yes.
but what that has meant was that we had to change the listing to be a cash only listing, because clearly, if banks aren't going to lend against it, it has to be a cash buyer. Once you make it a cash buyer listing, you're going to have to drop the price, which is what we've had to do. And we've taken off, I would say, about 15% of quite a large fee. So we're in the early stages of the conveyancing at the moment. So there's not too much I could say about it or want to say about it until we reach exchange, because that will be the moment where...
I don't think you've actually said yet that you've accepted an offer, but we talked about you've had a few offers, but obviously you've had an offer that you did accept.
So we had a few offers, and one came back on a couple of occasions. We proposed a greater amount, which they didn't accept. And then my business partner on this one, we discussed it and decided that the best course of action would be to accept the offer, even though it's not where we want it to be, because we still have a large amount of capital in the property. So we accepted it. I'm still quite tentative around it because, as all of us know that's ever bought or sold a property, it ain't over till that exchange paper is signed. So we've got a bit of a way to go. And on this property, anything can happen. We've learned so much on this, and the fact that my business partner and I are still on speaking terms has shown us that we are a good fit in terms of values, because it's one of those properties where if something could be an issue, it's been an issue. The good news is that we've resolved most of those issues and we're working through them, some of which I will share more on once the property is sold, but reticent to share much more information on it now because we're still trying to tie things up and we are talking about legal things, so I don't really want to get into that.
You don't want to risk jinxing anything at this stage?
No.
It's still somewhere in the region of a third of all agreed offers that then later fall through. So yes, you need to try to help your offer be in the 2/3 that succeed rather than the other way around.
And we've done the due diligence via the estate agent, who is a really good estate agent. We really like him. He's ensured that the money is available and has pushed that through to make sure that before we progressed, he's seen that the funds are in place. So we know that they're there. We have an offer. So it's really now just getting that through as quickly as possible so that obviously we can chat about it.
Given that it is a cash offer, are you expecting it to happen a little faster than sometimes, or do you think the bigger delay is just going to be the general conveyancing process even without a mortgage being involved?
Yeah, I think obviously you want it to happen quicker when it's a cash purchase, but with this property, with the legal stroke conveyancing process is no doubt going to take its time. I think we're hoping for completion by the end of November. Fingers crossed. That's what we'll be gunning for.
That's pretty quick.
Yeah, I'd say that it would be quick. It's then dependent on the managing agents, because then you've got to get a leaseholder pack. You've got those points to be ironed out. And dare I say it into the world, but the buyer may get cold feet because of those things that we've been very upfront about.
Well, because of any number of things.
Yeah. Because they might want might want greater confidence, for example, from the managing agent that it's going to be resolved. And so the works are ongoing. I mean, right now, that's the good news for us, is that there is scaffolding around the property because they are working on the external walls. Mm-hmm. So they are working on the cladding. So it's there for all to see. It's tangible. We're not just saying it to try and sell the property. The next question then arose, well, when is that works due to complete? We think it's due to complete next year, Q3, Q4. And then, of course, will you get the EWS1? We can't answer all of that now. So that's, why I'm sort of reticent to get too confident just yet, because as a buyer, they may start delving into it and decide not. However, equally, they are getting a property we are very, very comfortable. They're getting a 15 to 20% discount because we know what we bought it for. They'll be able to see what we bought it for, and they can see what they're getting. So they are getting a lot of value, and that's the other side of it. So that's the equation. Hopefully, they've done that already. and have thought that before they put the offer in. And you'd hope so if you're a cash buyer.
Yeah, I would think so. I can't imagine a cash buyer will be making offers without doing a good chunk of due diligence first. It does take effort to actually prove things to estate agents and get that process rolling. So you do your due diligence. Yeah, you would do your due diligence first.
Yeah. And those are the reasons you put those obstacles in play, not just to verify the buyer, but if you say to someone, we'll take your offer as soon as you've shown me your proof of funds, it's not just about showing the proof of funds, it's about the fact, are they willing to make the effort to do that? And if they are actually willing to do the effort, and if the funds are in different places, I know it sounds stupid because you're just snapshotting a statement or you're downloading a PDF, but if you're not serious, you're not gonna do those things. And I do that in work situations where if I'm looking at a property for a landlord potentially wants to give it to me as a rent to rent, I always just say, can you just share with me some utility bills, provide me proof of ownership, and hopefully they're not listening. But I want that information because it's important. But I do that just to test how serious they are, because if they just disappear, as some may do, then I realise that they had very low interest in following through.
Yeah, quite. It can be useful just to put in some little barriers some little barriers that require effort to just check that people are willing to put in that little bit of effort to help things along. Otherwise, if they can't do that at the early stages, there's going to be bigger problems later on where
exactly. So yeah, we always put out these little hurdles for people to clear, so that once they've done that, we can move forward with confidence. And I think hurdles is a nice segue. So hurdles in your property selling. So you're selling a property. You had an offer after like 5 days, which obviously made me very, very happy for you. Very happy for you. So which hurdles are you clearing with
totally that? The way your face looks as you say that, yeah. Sorry, you had a question. I was busy speaking over it and didn't hear it.
So which hurdle are you currently clearing with that? Which stage of the sales process are you at?
The purchaser has booked a survey. So that took a little bit of organising between them and the agent and the tenants so that access could be arranged. But that's now been booked in place. As we record, it's going to happen in a few days' time. So I don't know the result of that yet. And now this is a cash purchase as well. So this isn't a mortgage-based survey. This is a survey just for the buyer themselves. And hopefully there won't be any surprises out of it. But only time will tell, and I shall report back when I can on our next updates episode, hopefully. But for now, my updates are very, very thin on the ground.
Well, that's a very sizable amount of cash, isn't it?
It is, yes.
They're not Italian and speak with a Godfather type accent or anything.
Not so far as I'm aware. I hope the agent has done their anti-money laundering.
I was just going to say AML.
Saying things today. Yeah, AML, that's the one. Hopefully the agent has done their AML requirements and checked that this buyer is permitted. But yeah, I'm sure they are.
Sure they are. Not casting any aspersions.
Seeing as my update's so thin, I had a quick question actually on your sale that you've now had agreed. You did have a short-term tenant in this property for a while. Are they still there, or have they gone at the moment? And how are you handling that process if they're still there?
Yeah, so the tenant is still in the property. They are on a short-term let. I know we've discussed that on a previous podcast, but that was for an initial 3 months with a 1 month rolling. They are fully cognizant of what we're doing, obviously, because they've been allowing people into the property, and so we'll just keep them posted. So given that I think they've agreed to 28 days notice both ways, we'll just keep them up to date, and once we get to exchange point, we'd obviously just set the exchange we'd set their leaving point to 28 days after exchange.
So them leaving and completion lines up. Yeah, I'm glad it's not just me who can't speak properly today.
You passed it on to me.
Oh dear. It's okay. We've only got another 10 minutes or so to survive.
We're doing fine. We're doing fine. So I think the other thing we were going to talk about then was following the interview with Tom, there was a number of different subjects which came up for us. And I'd love to hear back from people, by the way, if you've got any feedback for us on that interview or any other episodes, do reach out, let us know via contact details in the show notes.
Yep. Visit thebusinessofproperty.com and there's a contact form there. And I think actually, even if you're a bit techie, there's an email address in the RSS feed if you can find that.
Well, there you go. So if you do have any questions coming up from any of the shows, but questions or feedback, please do let us know because it will provide us with some useful content. I am only half joking, of course.
I'm not sure we're supposed to admit that.
I am only half joking. I'm half joking, but it would be very good to hear from you. So please do reach out. But we talked about a number of things in the Tom Soane episode. A couple of things that both you and I commented on afterwards was method of modern auction, which immediately makes me want to spit, and then guide prices and making offers. Should we talk about?
I mean, these are all tied together, aren't they? In that auction sort of bucket, if you like. You've got a lot more experience of auctions generally, as in the real world live auctions than I have. I have been to one enormous room auction that I did not bid in or sort of partake in any way other than being an audience member. But you have more real experience of that. And of course, they aren't happening these days. So all of the real auctions, well, pretty much all, have gone online. And they are now a bit more prevalent online. And I think you see, or seem to be seeing, a lot more in the way of guide price sort of numbers on the portals. And I don't know if this is really just an increase in auction listings or whether this is a sort of bandwagon that lots of agents have decided to jump on as well and think, oh, that's a good idea. But when you see a guide price listed, what does that sort of price mean to you?
Well, I think if it's just the standard price, I think it is just that, to me, is the guide price. So there's been an evaluation of the property by the estate agent. And as Tom quite interestingly and quite rightly points out, is that some vendors will just put their own price in anyway. But for me, the guide price is that stake in the ground of what it's worth. And of course, as we know, guide prices are subjective. What you might think is worth 100,000, I might think is worth 75, and someone else might think is worth 125. And that's why it goes out to the market for a guide price. I think one of the things we talked about on that episode was where there is a guide price band. That's so guide price to me is absolutely fine. And then there's a strategy around that, and we all do it, where we're thinking, which band do we want to look in? Because we know if we're going to go to Rightmove, and that is the key platform, as Emma shared with us many episodes ago, and we probably reference that in the show notes if we could. And she talks about the fact that I forget the exact figure, but let's go Pareto principle and say Rightmove will be 80%. So if we're thinking about most properties will go via Rightmove, then really you're subject to their banding of prices, because if you put your property price at, for argument's sake, 201,000, you're going to sit in that band of 200 to 250 and will potentially lose your market that's only looking up to 200,000.
Yep, right. So
that's what we were talking about in terms of guide price. The element for me which raises my eyebrow is always the banding. And as I said on the last show, I had a conversation around this, and Tom almost, well, I think pretty much verified that it was the case, where when you do a banding, well, there's multiple facets to it. One is, my view was that you do always have a difference of opinion between a vendor that wants to get a high price, and of course, every vendor, we're no different, will always want the highest possible value, versus what an estate agent's collective experienced view of the price might be. And this banding could meet both of those requirements. So you could say, well, I think my property is worth 250, but the estate agent says it's worth 230. So we're going to say guide price 230, 250. But when it appears on Rightmove, it comes up as 230. So again, there, And then that's the third element to this whole piece, is that actually, if you do want, say, 260, but you want to put your property in the under 250 band, you can put it up for 240 to 260, thereby getting all of those people that are looking only up to 250 and getting them in. I don't think we talked about your view on the episode, but my view going into this was that if you see something banded for 240 to 260, I feel you're already anchored at 240 as a buyer.
I totally agree. It's when you're viewing listings, if you see that lower banding point, that's the anchor, or at least for me, that's where my thoughts get anchored. So I think it's great for being able to list that and get it included in more searches. But I do wonder if it might cause an issue in trying to then work your way up towards the higher point. I mean, of course, if the vendor just isn't willing to accept an offer at the lower point, then of course it either goes up or it doesn't sell. But as a viewer of the listing, I definitely get anchored at the lower point. And I think this is where it's a bit different between generally for sale properties and auction properties. So traditional auctions, the guide price has to be within 10% of the reserve price. It can be higher or lower, but it has to be within 10%. And auctioneers will very often put properties on with a relatively low reserve price and hence a relatively low guide price, because they know there's going to be competition in the room for that particular property, that opportunity for people there. So they know it's going to be bid up. They know that on the day there will be competition for it. Start it low, get people interested, and then the multiple people will bounce off each other and push that price higher. But with a normal estate agent based listing, you can't guarantee that. Or at least, I mean, in an auction, you don't actually guarantee it either, but it's a much higher chance in an auction. In a normal listing, just relying on people discovering it and talking to the estate agent, you don't know who's going to notice it. You don't know whether it will be one person or several people. So maybe a lower price, a lower guide that catches attention will mean that multiple people are interested and you can let them bid that price up. But maybe you don't. Maybe only one person happens to notice it that week or that month. And you just get stuck at that lower price that you've now anchored everyone at. I think must be a much bigger gamble when you're not putting people into an actual auction. What do you think about that, Stuart?
Well, you've brought us back round to the point, because I think I meandered slightly on the guide prices, but I think it was important to get clarity in terms of what we're talking about on guide price. But I think what we were talking about was this method of modern auctions. So you're right in terms of the 10% reserve price and everything you said. I agree. I mean, I'm seeing a lot more auctions happening now, but yes, they are all online, and I've attended a couple of online auctions. But like you say, the purpose of the auctioneer is to glean that interest prior to auctions. They'll be doing a lot of marketing and stuff in the background, which I suppose estate agents can do.
Just to interject, sorry, I'm going to spoil your flow. The online auctions that you've attended, were they room-style auctions, but put online, as in sort of a video feed, auctioneer standing in front of the room type thing? Or were they just entirely run on a website, a bit more eBay style?
No, so far they were run as an auction would be run. Now, I haven't attended one in the last couple of months, so I would imagine that's changing now because of everything that's gone on.
I think it's a mixture. I think different auction houses are taking different approaches. I've certainly seen one, or I could say even attended one, seeing as I was sat at the screen looking at the auction listing and seeing it update live. But yeah, I've attended one that's taken the other approach. So there wasn't a person in a room sort of processing each lot. Instead, they'd had a system, an online system, that was much more sort of eBay style. They opened the bidding at a certain time and there was a deadline. And it wasn't sort of, as you'd find in a room, it wasn't a few minutes, it was a few hours of potential bidding. And then, of course, as everyone does in an eBay style auction, in the last 30 seconds, people put in their bid, hoping to catch everyone else out at the last moment. And in this particular style of property auction, every time someone put in a bid that was the new highest bid, it extended the auction by a few minutes. So it kept getting extended in the lot that I was watching, and people kept bidding it up that way. And of course, it gave them extra time to think about their next offer and put that in. So I think it worked quite well in terms of bidding the lot up. And of course, it didn't involve somebody standing at the front of a room. It didn't involve a video feed, and it allowed a much wider window of time for people to be interested in bidding on that property. Although, of course, all the action took place in the last 15, 20 minutes. It would have been less than that, of course, but it kept getting extended.
Yeah, and that sounds like COVID will be expediting more of that, and that sounds like the sort of environment where, as a vendor, you'd want to get involved. And that also, bringing us back to modern of method auction, sounds like where estate agents were trying to get to. Now, I have to be honest, I haven't seen many for sale by method of modern auction recently, but those I did see probably in the last 12 months or so, and this is obviously anecdotal, I don't have any figures to support it, but those that I did see always surpassed the date, and then I saw them for sale again afterwards. And there were benefits to method of modern auction insofar as, we've just looked it up, but if the price is agreed, you've got 28 days to exchange and then 28 days to complete. Clearly, there are benefits for the buyer there, and also benefits for the vendor because they know it's going to sell. But there are also benefits for the buyer because once that's been accepted, you're not going to get gazumped. I think the challenge was that what they hadn't got right was the bit that you're talking about there, where it sounds much better, because what they were hoping was obviously to get that price bumped up. But what I saw were properties that might have had low prices, but A, because no one had really communicated what method of modern auction actually meant, and B, because you just weren't sure what was going to happen if you put in a price. I think people just really didn't go in for it.
I think because it's different from what people are expecting, and yet here it is being presented by your traditional high street agents. I think people are just a bit wary and confused, especially seeing as the method of modern auction listings normally come with extra fees for the buyer rather than the seller, which of course is traditional in auctions. Normal auctions, the buyer will pay auction fees.
Yeah. And I'm glad you reminded me of that. So, because I did find a property that I quite liked that was by this method. And so I looked it all up at the time. And I remember the key stickler for me, and I can't remember the exact figures, but let's just say it was £1,000, £1,500. That would have been an additional fee. So you'd pay a reservation fee, and I think most of that would come off the purchase price. So that's fine. But then there was this additional fee incremental to the other fees. So it kind of felt like, the vendor would be paying the estate agency fees. We'd be then paying an additional fee. So it felt to me like a situation that was engineered really just to create more cost for both vendor and buyer, versus if you're going into an actual auction. And we looked at the Croydon property, bringing us back to the start. We did think about putting that into an auction, but my sort of concern with that would have been around the fact that if we had to pay auctioneer fees and then it doesn't sell and so on. However, that's not the case. Wasn't the case in this auction now that we're speaking with, is that they would no longer take fees if the property hadn't sold, which wasn't always the case. In other auctions that I've looked at, you would potentially pay the fee up front, whether it sells or it doesn't sell.
Well, that's very interesting. I hadn't realised there were. I didn't know the arrangement at all for vendor fees on auctions. So that's quite interesting that there are sometimes fees there, but sometimes not if things don't sell.
Yeah, and I guess that can change by auctioneer and environment. But then that led me to the point, well, where's the benefit? So this method of online auction, I just couldn't see the benefit for me as a purchaser, and I could see some for the vendor.
I think mostly it's benefit for the agents.
Yeah, and but that's where I got to. For me, it didn't feel, without getting too into it, but it didn't feel like a consumer-led approach. It was very much an estate agent-centric approach, and therefore, if we don't see benefits from it, we're not going to use it. And that's why, I don't know, but maybe that's not been as prevalent. Maybe it's just because the market's fairly buoyant in terms of transactions. Don't know.
Yeah, another sort of twist to this that I've seen on some listings is a normal property listing. So not an auction, not a modern auction or any other kind, but just a normal listing. But it's listed with a bit of small print at the bottom or somewhere in the description that says there may be buyer's commission to be paid. I can't remember the exact phrasing, but it's something along those lines. And I don't understand this. I mean, why? Are you just trying to trick buyers into making an offer that's higher than they would have because then they have to pay commission on top of it? Or are you really expecting everyone to read and understand this small print you might be offering? From my own personal point of view, whenever I see that, I just, next.
Scroll on, yeah.
Don't worry about it.
Well, and that's what we do. If we don't understand something, we're not going to go towards it. And as soon as you say buyer's commission, stamp duty. That's what we pay for buyers. There's enough commission going around without adding. But when you think about it, you can possibly understand where some of this is coming from with reduction in fees and greater transparency in the market. But as we know, these fees get renamed and reapportioned. So estate agents that are good at their jobs can't plead poverty.
No. But equally, estate agents who are good at their jobs are good at their jobs. They will help sell a property. They will help get a good price for the property. And they will help that property work its way through the process from offer to completion. And that does take work. It is a reasonable chunk of effort up front to market a property. And then it is also quite a reasonable chunk of work, especially at the moment, to see it all the way through to completion. So I don't begrudge estate agents for taking fees and being paid for that work and that quite important task of keeping the process going. But I do get a little frustrated by some of the I don't know, how should you put it? I'll put it as obscure marketing tactics for some of the fees. That's I think is a little concerning to see.
But as we've said, I think if they are obscure like that, and I haven't as soon as you said buyer's commission, I'm sure I have seen it, but I haven't seen it that often. But like you, I'd be exactly the same. If I see buyer's commission, I'm scrolling on because I don't understand it, and I don't understand why, unless I was really interested in the property and I thought there'd be some merit in understanding it. Otherwise, we just don't have the time. And what this comes down to, all of these things, ultimately, whether we like it or not, is a property will sell at the right price, but that right price will be different at different times of the economic cycle, depending on where it is, and so on and so forth. So I want to finish with a positive point, because the estate agent we had on the Croydon property was exactly how I would expect an estate agent to be. Was very transparent's not the right word, but he was very clear on what he believed the value of the property was. It just so happened it agreed with ours, which is obviously good. However, if it hadn't, I believe we would have acquiesced to his guidance because he was speaking with some good authority. Equally, when we had the challenges with it, where we then had to resort to cash buyers only, he took some good advice. And what I really liked about him was that he already had a pool of people, and he said, look, this is the value I believe I can get people in for. And he did that. So we can talk about methods of modern auction. We can talk about why do we sell at auction? Because we want some sort of expediency on the sale. Ordinarily, you're not going to get more for that property. So usually there's an element of expediency that needs to get rid of. So if there isn't the expediency, really, you've just got to market at the right price. And if you're not selling at the price you want, then that's not the right price for the market. And whether we like it or not, as I said before, that's the point. And I've been in a situation to benefit from that, and I've been in a situation where it's been detrimental. So, yeah.
Yep. The market will decide the price.
The market decides.
Indeed. So I'm not entirely sure that's quite as positive a note as you were hoping to finish on. But but it is time to finish, sadly. So it just leaves it for me to say thank you very much for listening, and for all of those who are enjoying listening to our ramblings, please do let someone else know about them. It's very much appreciated by Stuart and myself. And show notes and links that we may have mentioned in all of our episodes can be found at thebusinessofproperty.com. We will talk to you again next week.